We're kind of living in this same spot we have been for a very long time. We can talk about ticking up or ticking down over time slightly, but the reality is we're living in a very similar range for quite some time here now. We have a lot to cover here this week with inflation and jobs data after the Fed decision to cut rates there recently. I'm Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, the data, the trends we're watching, hopefully weed out a bit of the noise along the way, and try our best to leave you feeling more empowered after every interaction. So a couple things to cover here this week on the data side of it, and then we will have a great question of the week as well, touching on Washington State estate tax changes that I thought might be helpful to cover. Okay, so first off, I want to go back to last Friday. So last Friday, we actually had a lot of data come out between income, spending, and inflation points. So personal income came out on Friday. Personal income was up 0.4%. Spending came out on Friday. Spending was up 0.6%. So I guess generally speaking shows some strength still in the consumer in general. Now these numbers have continued to be a strength. So it's interesting to hear the Fed talk about jobs and how this could translate. And I think that's the story to watch is, if jobs do continue to struggle, what that ultimately might mean for the consumer as a whole. But nonetheless, based on the data at this point, income up 0.4%, spending up 0.6%. But on Friday, we also received inflation data around the PCE index. And really no surprise here is maybe the short version of it, but we had the headline number come out up 0.3%, which puts us at 2.7% year over year. And then, of course, we had the core PCE number come out up 0.2%, which puts us at 2.9% year over year. So again, both of these numbers, the headline and the core number, were both right in line with expectations. So not a lot of drama around these figures, but nonetheless, very important to watch, especially given the Fed's conversation there recently. And we're kind of living in this same spot we have been for a very long time. We can talk about ticking up or ticking down over time slightly, but the reality is we're living in a very similar range for quite some time here now. And it was interesting again to hear the Fed share that they feel like the risk there is much lower than the risk to jobs. And so let's go ahead and use that as our kind of pivot to talk about the jobs data that we've received so far as well, because we also kicked off Jobs Week here this week. So be sure to tune in next week because we'll also cover non-farm payrolls, which we get tomorrow on Friday. But so far this week, we've received data around job openings, and job openings did tick up slightly to 7.2 million. This may sound like a bad thing, and it can be depending on the lens you're looking through. But what this would suggest is some of those cracks around the supply and demand side of things. I wouldn't say 1 month means that we're good, but this would suggest a tick up would suggest that this created a better scenario just between, job openings, I guess, in terms of what people are hiring for and how many jobs are out there, right? That's the key. Take that with a grain of salt. That's in a vacuum. That's what this would suggest. Now, that said, we also had ADP employment report come out today. This shows we lost 32,000 jobs. So very important data point to cover there. I will share time and time again, we've covered this ADP employment report and it can be a bit deceiving sometimes. So be sure again to tune in next Thursday because tomorrow we get the non-farm payrolls number. But either way, it was an important data point and very different than expectations where we actually expected some slow growth, but some growth in the jobs numbers. So again, a loss of 32,000 jobs here recently for the ADP employment report. And coming up, be sure to tune in. We'll cover non-farm payrolls for tomorrow. And then we also get the Fed meeting minutes there next week. But before we break here for this week's session, I do want to cover a great question of the week, which actually has been a big topic just all around. It feels like we've had a lot of questions around this from clients lately, and I thought I would just share it briefly with the group here, which is around the Washington State estate tax changes. So Washington State, about midway through the year here, actually rolled out some new estate tax law, which is good for some, not good for others. Basically, what happened is the Washington State has its own estate tax. This is above and beyond the federal exemption and federal estate tax considerations, but Washington State has its own as well. And generally speaking, but prior to these changes, if you had an estate above, it was roughly let's call it 2.2, 2.3 million. Everything above that was where this tax would start to apply. So the exemption is that amount where if your estate is below that, there's no tax due. If above that, everything above it would be. So basically, the short version of these changes was that it increased the estate tax threshold, the estate tax exemption. So it's now 3 million flat. And this is actually pegged for inflation now moving forward as well. So looking backwards, it actually was stagnant at that level for a very, very long time. Now, I think that's why they increased it, but with that increase also comes an annual adjustment as well. So that will tick up. However, what I have heard, and I'm not 100% sure on this stat, but I heard it from an attorney, is that we are now the highest state taxed state in the entire country in Washington State here. So something to be aware of. Now, that said, the way that this bracket or the taxes work on the Washington State estate taxes is there are brackets similar to like your income, for instance, where your first X amount you pay this amount of tax, the next you pay this, blah blah blah. That is how the estate taxes work in Washington as well. So this stat that this attorney was referring to was for the folks at the high end of that, which I believe is 9 million above the exemption. So if your estate is 12 million or more, that's where that would apply. So thought that might be helpful to share kind of a quick update. Again, there are brackets if you find yourself over that 3 million threshold. So most of our clients kind of find themselves somewhere around there. And so it's important to kind of identify where in that bracket you might fall. But either way, the high level view of it is that they did increase the estate exemption to 3 million. Again, on the high end now, we have a much higher tax, applied to those dollars. And so if you do find yourself in that higher version, it's definitely something to be aware of and looking at the trade-offs between some, potential giving or recognizing gains and things like that now versus potential estate taxes down the road. So hope that's helpful. Again, been a very big topic as of late, so I thought I would share it with the whole group. But be sure to tune in next Thursday. We have non-farm payrolls and Fed meeting minutes to cover here next Thursday at 3. In the meantime, have a great upcoming weekend, and we'll see you next week.